Okay, team. So stray dog. I'm the dog catcher. Welcome back to F.A.C.E. How are you?
Hi, Dale.
Hey,
Do you hear
Relja,
me?
how are you? I hear you loud and clear. How are you?
Great. I'm fine. Let me just show myself a bit. Hi, everybody.
Okay.
Um,
Hi. How are
I
you, buddy?
I will just now turn off the camera and let's talk. So
All right.
in the
Yeah, so you want to
previous,
talk about the DAX. I saw your tweet. You had some.
yeah, I want to talk about the DAX between other things. And
Okay.
in the previous interview, which was my first with the F.A.C.E. back in April, I talk
Yes.
about my beginnings, and who is interested to hearing about that, he can find the link on the YouTube, and also I put that link on my own website in the About Me section. But long
Okay. You
story
want to share
short,
your screen? You want to share your
yeah,
screen while we're talking
yeah,
now?
yeah, yeah, okay.
Down at the bottom.
Yes, I can see that. Share.
Yeah, here it
Okay.
comes.
So
Yeah.
yeah, this is one of my charts. It's a DAX monthly chart, one of the popular charts that I'm showing from April 2021 when DAX first came here, hitting this upper rail of a 15-year-old channel. And you asked me last time in April why I think that DAX is old school instrument. And I think I have thought about that question a lot, because I do think that DAX is an old school instrument simply because it reacts very good on horizontal levels and on industry standard moving averages like daily 50 or daily 200. So long story short, about me, I'm a short-term trader. My focus is day trading. And my primary question each and every day is going to be, where is my day trade for today? Also, my trading system is location-based trading, which is like, let's say, like a adaptation of the Wyckoff method, using some of the James Dalton principles as well. And I mixed all of that together into something that is simplified enough for me. I'm in trading for 18 years now, and simplification, longevity in trading, and repetition is very important for me. So
yeah, you could be simple yet powerful.
Yeah, that's just the case. I think people often forget somehow a simple horizontal line can be a very powerful one. And we can see something about that on this chart as well. For example, although I am day trader, I like to visit monthly chart, especially when month is over. Now we have step into the new month, and August is just this here, this one millimeter here.
Right.
And the big difference between DAX and the S&P is that this was in June for DAX. This is July. On S&P, we have like a railroad candles of approximately the same size, and the same is on other US indices. While DAX had this huge June, which actually was the worst June in the DAX history. There never was a bigger June than this. So that's the difference, and this, which I like to call the eye of the Sauron, is pointing at the previous highs. So this was highs here from November 2017, and this was January 2018. And you can see here how prior to Corona downside, the new high from February 2020 was just a poke above these highs. And we can see that pattern. On that pattern, I'm basing a lot of my trades on the false breaks. Okay. And we can see those false breaks, like I tweeted about that a few days ago.
We're approaching those levels again.
Yeah, we can see those false breaks on any given time frame, on monthly, on weekly, on daily, on 5-minute chart, and on smaller time frames. It is important for us for
maybe there's stop
day
hunts.
Trading. What?
Maybe there's stop hunts.
Yes, most of those are, especially on smaller time frames. Now,
You know my handle, right?
yeah, I know Forex Stop Hunter. And
Yeah.
we can see those hunts all of the time. Let me go down. So this is a cash also, DAX cash index. This is daily chart. And now
Nice.
here there is a, for untrained eye, there is a lot of stuff going on here. Because this is a chart where you can see daily 50, you can see some levels from before, you can see untested cash closes are these dotted lines. And those would, this was potential targets if the market could break higher. And the one here, this was Monday. And you can see here this doji candle, how they literally tested almost to the point the April low. So when I say simple things, I mean about previous month's lows highs, previous week lows highs, previous
Everything
days,
to the left.
Yeah, previous days lows highs, and so on. And here we can find some fantastic levels, but you can find it only, you know, if you have an eye for that, and if you you know, let yourself trust those levels.
How about using your imagination when you're charting?
You can use, of course, your imagination. I will show you this. I will show you this chart much more simplified when none of this happened. So
Okay.
let's go in time. So this is also DAX, but I have moved the chart to the left just to observe this, which we had. This is the all-time high from November 2021. And then here we had the, let's say, double top. This one is actually lower for like 5 points. And this here, which you can see, this huge rally, that was the Santa Claus rally. It started at 20th of December 2021. And here we got like 11 months. DAX wasn't really doing anything here, nothing much. And it was stuck here. So all of this is monthly, and this is daily. And I remember that in that period, whenever DAX came down, you know, down to the bottom of the range, so it was very similar to Russell 2000. Going down to the edge of the range, it was picked up. But then Russell had a so-called dead cross, daily 50 going down to daily 200. And DAX, which is not correlating with Russell, they started to mimic that pattern. And after
isn't gold just still operating under a death cross from several weeks ago? I know you don't. To
tell you the truth,
you don't know.
I don't know, to be honest.
Okay. All right. Then let me ask you this, because you know, that was a reporting. What do you think the probability of, you know, death crosses and golden crosses are for maybe being right for a little while, but then aborting?
It is a good possibility, you know.
So I mean, it's not a high probability.
No, I actually don't like those moving averages crosses. I am just talking about how the patterns were months apart.
Yeah.
But still, it happened pretty much the same on DAX. And the point of this chart is that when you see a level, it is important for you to mark that on the chart, because later, now we are coming to that later phase, it can serve. Now here, it is serving as a resistance. It was a poke, yes, it was an upthrust. It didn't test it to the point or anything like that. But after you see this daily candle and the price going down below that level, and the market showing inability of making a follow through above this, that it needs to be clear that it wants to go down. Now it is just a matter where it will go down. For example, this here, which was May low, DAX with these two candles, they were breaking the minus 20% from the all-time high. So at that period of time, only these two candles were like in those kind of technical bear market. How to say that, the one that media likes to call a bear market. But
20%.
Yeah, minus 20% from the all-time high was like here, somewhere here. So the only 2 days that actually closed below minus 20% were these two. But market showed much before that bear market behavior.
Oh, of course. Yeah.
For example, war started here. This is the candle, war between Russia and Ukraine. And you see what the first reaction was. They first went higher, and then we got this slam. Okay. And here, to be honest, I was wrong. I thought that this is a fishy bottom. It turned out to be a swing bottom. My idea was that market could go toward here, which was the October 2020 low, because here you can see that only a few candles were present, not much volume, not much time, and I was wrong there. But then when you have this kind of level, which is very significant one, let's go now to future, and this is what happened in July. You see this trend down day piercing just a bit, and here we have a spring. So my trading on smaller time frames, I often say that in my videos and when I talk to other people, give me a false break and I'm going to exit it on it. I'm a great believer in those false breaks and those pokes above level or below the level and not being accepted there, because what is this? False breakdown, which becomes a buy setup, and this becomes here a sell setup. And also you can see here how DAX, for example, when they made April high, they tested it 2 times. At the end, they made a false break. And this is what not only DAX, but other indices are also prone to do. S&P is doing that also quite.
How about moving from a history lesson to current market conditions and what you're thinking here? We had the Fed last week, market exploded, squeezed shorts enough.
Let me go to the S&P.
Okay.
So this is my chart. This is my chart of the S&P, and what I think here is also that if we are looking at charts and if we want to trade, chart-based to have a chart-based trading approach, then chart should go first, because here there was really big rips in this bear market. There was really big dips as well. And when people are stuck in some kind of fundamental thinking, they could be in drawdown, in longs from bad positions, or now in shorts from bad position, because somebody could like sell it here, where S&P was struggling around the minus 20% level, and also May low was important for the S&P. They were going up and down through it. They couldn't find acceptance there, and at the end they did. And now I think this 3-day range here. Now this is index, so obviously there is no candle for today since market is not open, but this 3-day range, which is just almost right at the resistance field, which I think is very important, because this here was a good amount of time and volume spent here. So from the supply and demand perspective, this is a good resistance, and no wonder that they are having trouble here to break. And so here I think it's going to be very important where the real break from this goes, because market tends to, at least if it's doing that on DAX, but I have observed the same behavior on the S&P as well. It tends to poke first, to test the both edges, to poke first, and then to make a break. For example, like we did here. So this is also a range. They poked higher, but then reversed hard to the downside, and you can say the same for this. So I think this is very important, and Nasdaq also is at the important level.
Yeah.
So I think these charts are pretty simple enough, and here just between these. So this is, for example, this is CFDs. I know that people are not really fond of CFDs in the US, but you can also put the where is my ES? Okay, ES chart there, and just Friday low, which is this, and Friday high, which is this, provided us with a very good trading opportunities, just fading those references like this.
Okay. Would you fade it again, or let me ask you this? So you have 3 touches on the top side. Do you notice that after 3, that if it keeps knocking on the door, the more it knocks on the door, the weaker the door?
Yes.
Okay.
My approach here is this is the anchor point. This is the anchor point. This is the first test. In this case, this was a false break, which I like more. I like more to see a false break, because false break by itself is more bearish than outright failure from resistance, because this is a trap as well. And we can imagine they're poking here like 1 or 2
people
points,
are getting long,
and people are getting long. They're like, oh my God, it's a breakout.
Yeah.
But I'm saying that all the time.
You predator.
Yeah.
You stray dog. You stray dog predator taking advantage of
the industry.
FOMO.
The industry is teaching us some things that are based for swing trading stocks. Because most of traders are trading stocks, and then they're going to say, wait for a breakout, and when you observe the breakout from the base, bang, you're long. But indices are baskets of stocks, and they are not that fast, they're not that volatile, beta is lower, and blah blah blah. And especially on daily basis, they're not making breakouts that often. Most of the time they're going to do this, and in the end, we are going to get a break. So in my opinion, long here is not when they poke a bit. That cannot be long. Long can be like a push higher significantly above this, then making a pullback. And I'm going to long, I want to go long here, but here I'm waiting. And as soon as I see that they are dipping below this bang, I'm short, and my risk is here, a few points above this. And the same goes for longs. And what you ask me about tests, obviously, when you test and test and test some support or resistance, whatever it is, it's going to be weaker. It's not going to be stronger. Although I have on my Twitter feed some axis lines, for example, one on NASDAQ, it was tested 17 times. It was working for, it is a level around 11,700, and it was working for 17 times as a support or as a resistance. So just imagine that you are making your execution is at the zone. So if the zone is support, you're going long. If it is a resistance, you're going short. Inevitably, there's going to be a loser at one point. And yes, it was served like 17 times, but in between, it was some moves that were going through that zone, and you would on 17 occasions have a winner, but on 4 or 5 occasions you would have a loser. And I think that's okay. But you need to execute every single time without questioning, which is the thing that many people are doing. They're questioning, but is it going to work this time? And
what's your hit rate?
That's the wrong question.
What is my hit rate?
You think like win-loss ratio or something like that?
Yeah, that's a bad question.
No, it's a okay question. My personal win rate is for good time around 70 to 75%.
For good times?
No, for good times, but for
for
a
so
long time.
Okay, for a long time. That's excellent. Yeah.
But
and,
I am interested mostly in setups in day trading, which are fades and false breaks. Not so much about continuation type trades because they are rare.
Yeah.
For example, this is DAX. Oops.
Yeah, you're looking for kind of like inflection point trades.
Yes, exactly that. Location-based
On
trades,
shorter
inflection
times.
points. Yes, and you're fading those inflection points. For example, this is what we got yesterday, and this is yesterday, these lows in DAX, and this is today. And in both cases, we got the open drive lower first. So this is the opening candle yesterday. And I told in the video yesterday, because I always advocate, for us to have a resting order, like have a limit order. If this is in this case, S1 zone, that means this is a main resistance zone. I'm sorry, main support. Oh my God. Main support, have a resting order there. What's the worst possible thing that can happen? Obviously to be stopped. And on that stopper, you're going to lose -1 hour.
So you put both the resting order and
the
stop
I put resting order here, and that
stop.
resting order will, in my case, so I'm trading like that. Every time I'm entering the market, I'm entering with a bracketed order. So that order already have the stop and already have the target. And those can be some generic values, but then you need to adjust those values to be, stop must be behind invalidation points. Stop cannot be too small, otherwise you're going to lose all the time. But you see this.
Do you find that you have the patience to teach?
I like.
That's why you do it via video.
Yes, I like to make those videos because I think they are not helpful only to the selected few people that are actually watching those videos, but to me as well. Because at the end of the day, when I make a video, I'm going through those repetitive concepts, setups,
NLP.
things that market are doing all the time. Like making marginal higher high, like you see this. A marginal higher high going back into the range. What is this? Marginal lower low with bullish divergence going back into the range. And they are doing that all the time. And inevitably,
I know it's good for you, but
this
when
range
people,
is going to break.
I know it's good for you. I know that's part of the reason you do it. And you also want to attract business. But let me tell you something. If you can't ask somebody a question when you're trying to learn something, that's an important element that's missing in the mentoring process.
Absolutely. So, for example, my email is always open, not only for people that are my subscribers, but for everybody. And,
well, that's cool, man. All right. Because a lot of people do, they'll put out videos and then people can't even reach them and go, well, you say this, and what do you mean by that? So,
of course, and you never know what kind of person is going to, be a client. Is it going to be a person trading 20 years who just need another opinion, who just want to read morning notes, just want to take a look at charts? It doesn't, for example, he doesn't care at all about videos. He doesn't need videos or anything else. Or is it going to be a beginner who doesn't know what daily 50 is, who doesn't know what the cash close is, and then you need to take some time and explain a few things.
I can't do that anymore. Anyway, thank you. Anyway, I used to be able to. Anyway, it was great having you. And sounds like you're in the zone because you're usually in the zone. So,
I am in the zone. I can finish this video like the last one with the anecdote if you want.
Yeah, I love anecdotes.
Anecdotes. So I think everybody that ever traded in the brokerages or prop firms can relate with that kind of anecdote. So traders received a plan. And it was a good plan. It was done by the analyst. The head broker was there also, and market cooperated, and everybody was profitable but one trader. And he lost. And he said, I lost. And head broker asked him, what did you trade? And he take a look at his plan. So it was a person who was commodity trader in the firm, and his job was to trade oil. And he looked at his plan and he said, okay. So levels were good. And why didn't you execute? What did you trade? And the trader replied, "Well, I trade some shit." Well, that's why you lost. And the anecdote is about the trading plan. If the plan is decent, if the plan is giving you decent zones in decent areas in decent scenarios, that plan you can throw into the garbage if you don't execute on it. If it is just staying like that, it's nothing. You need to execute. So that would be it.
So know why you're getting in, where you're wrong, and if you're right, what you're looking for. That's a plan.
That's a plan. Yeah. The
okay,
plan.
buddy. Well, I plan to have you back someday.
I'm willing to go
Is that
back.
a plan?
That's a plan as well.
All right.
You know that I'm not shy. I literally have like 10 notes opened about possible topics that we can discuss. There is so much. There is so much to discuss in the world of trading.
Yeah, a million ways to skin a cat, and stray dog. You have no fleas. All right.
Yeah, I hope so.
And really appreciate you sharing, you know, the kind of stuff that you do, and have a great remainder of the summer trading season. And we'll get back together in the fall. We'll get back together in the fall, my trading warrior brother.
I appreciate it.
Okay, everyone. Relja, and you can find him on Twitter at Stray Dog Trading. Is that the best place to?
Yeah. This is my. Let me. Oops, I don't see. Yeah. Okay, like this. Yeah, at Stray Dog Trading. Yeah.
Okay, and you let people send you DMs or emails. And what?
Yeah, email is
Want to show
much,
your YouTube page?
Email is much better. Let me just.
There's your website. Okay.
Yeah, this is my contact for people if they want to send me an email. Also, I have a.
Your dog looks like an NFT, man.
Yeah, that's an idea. Logo is.
I want 20%.
Yeah. Logo is actually done by my wife.
Oh wow, talented. Okay. All right. Well, thank you, buddy. Relja, thank you very much for being with us. I guess he can't hear me. Or am I gone? Anyway, guys, thanks. You could join the team in 15 minutes. See you, Laura, Alexander. People enjoyed hearing you, Stray Dog. And I love dogs.
Me too.
I think, I think that God had his best day when he made dogs, because they give us a sense of how he loves us, and practice to let go because they have shorter lifespans. So anyway, that's the end of my homily. Everyone have a great day. Good luck in there. Remember, we have NFP on Friday, so don't load the boat in front of the number. And don't just count your pips, count your blessings. Appreciate your time, buddy. Thank you.
Thank you, Dale. Bye.
Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.